Hey, it's Mac with PriceActionTradingSystem.com, and it is Tuesday. It's May 9th. This will be our chart lesson for the day. And just another, it's a down day today, but it looks like it so far on this. This is the daily chart with the envelope bands. It looks like we're just bouncing right off the midline there. It looks rather bearish, but when you look at the 2000 tick intraday chart, it just looks like another range day. And of course, we did close near the lows, so it makes it look bearish today. And that could mean we're going to get some follow through selling because we do have a lower high in place now. So we could see some more selling come in tomorrow. Tomorrow, there must be, I'm not sure what news item is up for tomorrow, but I already got something about them after 5 o'clock today until after the news tomorrow that margins were being raised. So I'm not sure what news item it is, but there must be some news item tomorrow. I don't think it's anything to do with FOMC. Maybe some minutes are being released, and that could set off some fireworks. Maybe there's some other economic thing going on tomorrow. I'm not sure what it is, but just be prepared. Sounds like there'll be some news. I use the News Guard, and it'll put it up here for me, whatever it is tomorrow. It'll be there when I open my chart. If you don't have that News Guard, if you're a premium member, we offer it for free on our site, a couple of them. Download it, and it just automatically puts the news in there. It has settings on it. You can set it up to do whatever you want. I only have it put up uh, the red high volatility ones. I don't think I put the green ones up there. Maybe I do. Definitely don't put any yellow ones or anything. And I only put U.S. stuff, so I don't put anything, any kind of foreign forex kind of news or anything like that. So I just put the high volatility or the red uh, U.S. news, and that way it alerts me. That way I don't get caught off guard. So that way I don't have to keep up with the calendar or know when I open my chart if there's any news, it'll be there. So it's a great tool. If you want it, you can get it for free on our site if you're a premium member. So, but also I wanted to real quickly just say thanks for all the emails and the support and the feedback I got on yesterday's rant, I guess is what my soapbox. I think that's what we've decided we call those days when I get on my soapbox. And, I always hope when I do things like that, I'm doing the right thing. But I usually follow my gut feel, and my gut feel said I needed to do that. And I knew it would probably speak to some people, and some people it might make mad, and other people could care less. But I was really surprised at how much response I did get, and how many people told me they needed to hear that, and that it spoke to them. And I swear to you, I do this a lot. I just get this desire. Sometimes it's just in the middle of the video. I get this desire to start talking about certain things. It just pops into my head, and I start talking about it, and then I get these emails from an email or two, or like yesterday, maybe a couple of dozen, and people saying, "Man, that was so enlightening, and I'd never heard that, or I needed to hear that, or it was something that I felt like you were speaking directly to me." And so I still think there's reasons why these things come to my mind, and I feel compelled to do them. And I don't think anything happens by chance. I'm not a person that believes in chance. So I've never had any luck with chance. So I'm not a gambler. You can't be a gambler. If you're a trader and you gamble, you won't be a trader very long. You have to know how to read this chart. You have to go for sure things. And but anyway, thanks for listening to me yesterday. Those of you that didn't like it or didn't want to put up with it, I appreciate you putting up with one less chart lesson to hear me get on my soapbox. But let's get to a chart lesson today. You see it down day to day. When we go over to the 2000 tick, it's mostly an intraday sideways, and it's tight too. So there wasn't much movement today. There wasn't much volume today. That tells me that the traders are waiting on something. So I don't know what's coming out tomorrow. We'll find out tomorrow. I'm not going to go look it up. I'll see it in the morning when I come in. I don't really care. All I care is to know when it comes out and to make sure I'm probably flat beforehand, and then I'll wait for it to settle down, and I'll jump back in if I still need to trade for that day. So, and that's all I give. That's the only thing I care about the news. Otherwise, I could care less about it. So, Uh, I'm not going to try to trade it. I'm not going to try to figure out what the market's going to do. I'm just going to wait and let it show me and go from there. So anyway, um, let's flip over to the 2000 tick chart and we'll go through the trades. Not many of them today. It was not a great trading day, but let's flip over there and go through those trades. And just real quickly, one more time, if you haven't seen yesterday's video, I encourage you to go watch it. See if there's something there that interests you or catches your attention. But I think it's a great video. The points are valid. The points are important, and sometimes it just takes a little bit of just showing somebody really the simple steps you need to take and putting them in order for them. And so they're there. Go take a look at it. Listen to that video. It's 40 minutes, and glance through the parts you don't want to listen to. Take what you will from it. But I did want to encourage people that haven't seen it to go watch it. I think it's important. But anyway, let's get to the chart list. You can see how tight this was today. It's a 10-point range basically. We traded down into this range, but notice we clearly had a break here and a move to a new low. But the market just could not reverse. We had a couple of two-legged corrections that went higher, and we had a little failed breakout here, which I always tell you these look for these to try to trade them to the downside. And a lot of times you'll catch an important high or low on these, which this was the high of the regular trading session. So it was an important high, and we ended up trading all the way down to the lows again, basically. It's doubtful you could get a runner on this. You could have got a runner on it. Doubtful, though. So most people are not going to hold a runner through this congestion. I personally don't. So it's doubtful you could get a runner on this. And then you really didn't, even though it continued lower, you don't get much other opportunity here. So there's just not many trades here today. It was a really weak day. These are days you got to be careful. You can get chopped to pieces. These tight congestion like that, just stay out of it. You just get chopped up. It's really hard to trade this real tight congestion like this. But anyway, you got to try to get in at the lows or the highs, and there's not many of those either. So there's only this chart list is not going to take very long. Let's zoom in here. Maybe tomorrow will be all the fireworks. They're raising margins. They're expecting something tomorrow. So, and you can see here we were in a range. I didn't draw this, but there's a range here, or I just call that congestion. All congestion is a miniature range. And you can see how that actually, it really continues over to here. But once we broke out there, I'd probably play this about like this. And then we broke out the bottom, broke out the top. And then this was a failed second entry long. That might take the market lower. So I marked it as green because there is still some support there. So a little bit of concern, but we're probably going to make a new low on this. This is a pretty strong downtrend that lasted for the most part all night long, all during the overnight. So we're probably going to retest that before we go higher. Technically, this is a second entry. Notice the new low, first entry, and then second entry. There's still plenty of room down to that low. And I called this a failure. Technically, it's not because it didn't break higher here, but you can see we went down, tried to go higher, went down, tried to go higher. So it looks close enough. Really, we're playing the second entry here. And the signal bar is not great either, but if you played that as a failure, the signal bar doesn't matter. That's the only time we don't use this. We don't use our rule of the signal bar closing in the lower 1/3 for a short, or the higher 1/3 for a long, is when you have a failure. And the reason being is that we don't care because it's a trap, and so we don't really care. And you can see this did not act like a trap. So I don't think we fooled many people here. I marked it green just in case. And 7 o'clock actually came as we were coming up through here. So this is still real early. This is like after about the first hour of trading. And we ended up pushing on down, making that new low. Then we made a little double bottom. This one was really tempting, but when this inside bar didn't break higher, that concerns me. I don't like going long between there and that EMA. It turns out to be a great trade, but it's just not a good setup. So if you looked at that and says, man, I wish I knew I should have taken it and wanted to take it and didn't, and then beat yourself up, don't, because it's not a good setup. Yeah, it worked out, but next time, guess what? It won't. And then, of course, we get that little trend up, a break, move to a new high. We don't quite make a new high, and then we just start chopping sideways. This is all too congested. And see, it's tempting to want to enter down here. And if you'd enter on this, it broke higher, and guess what? It turned down, stopped you out, and then went exactly where you expected it to go. So you just can't enter in that. When you see 3 or more bars stacked side by side, and at least one of them has no body or a very tiny body, like this one right here or this one right here, that's congestion. And if you can't figure out why the congestion's forming, and even if you can, it doesn't change much, there's still a chance you can get stopped out. Just don't take a trade out of it. You need to be very confident that prices are going to go higher, which I was here, and I wanted to take that trade, but because of the congestion, I said, no, we may go down lower again. And sure enough, it broke higher, which would have stopped you in, and then it went lower down here and would have stopped you out, and then went exactly where you thought it would go. So don't beat yourself up over a missed trade if it wasn't a perfect setup. This is a great example. Down here it worked. This time, if you'd have taken it, it wouldn't have worked. And that's what will happen if you take this one and watch it work. The next time you take it, it'll be like this one. It won't work, and you'll get stopped out only to watch it go right where you thought it was going. So congestion just really, it's just a very small range. And really what we have a smaller range right in here inside the bigger range. And that's all that is. And because it's another range, let's just make that one a little different color. Because it's a range, prices will break out and fail just like they do on a bigger range. So it broke out here, failed, then broke out the bottom and failed, and then went higher. And it could have broke out and failed again. So we just don't know. So just let it go. This one is really tempting, but there's no break of that. I don't know why I made that one pink. That should be green. I must have accidentally changed it when I thought I changed this one down here. But notice there's no break, so we could get a close outside a new high. We don't, it just goes lower. But this is your signal bar, and you might just go short right there. It's a measured move. Notice that it's equal to the first leg, and that's what you're looking for. So, I mean, that's one you might take, but because of that, there's no break outside that green channel, it could just keep going higher, and you might get more than a measured move. So be real careful with that. And then this is just a first entry. Long and then a first entry short. So you got to skip that. It runs down here and then it just starts chopping sideways before it kind of moves up and chops sideways and moved up and chops sideways. I don't see anything in here. You do have a little channel here and you get a break, new high, and there's a lower high here, but we're right in the middle of this range, very tight range. This is a lower high. Maybe you go short there. It is a second entry short. Notice the new low, first entry, second entry. But there's a good chance we could still be headed back up here to the highs. And so I'm not crazy about it, but there's reasons to consider it. And then same thing down here. Then you get a triple test, but that is an inside bar, and it doesn't make an equal low. I'm not taking that. Those are too unreliable. If that would have made an equal low, maybe you go long there on that second entry too, because we do have some support across here. And then we run up and then we start chopping sideways, and we do get a breakout here. It's just a first entry. You might say, okay, that's a first entry, second entry failure. So when it breaks higher, you want to go long. But I'm not crazy about it. That's a much more advanced trade for us, so it's not for most of us anyway. And going long there, it wouldn't matter what the bar looks like because it's based on the premise of a trap. And so by it being bearish, that just more apt to trap more people and give you, and you see how quick it shot up before it started running into resistance. So it ran a few stops there, not a whole lot. This is too close to support. There's too much support there to go short. If this would have broke higher and failed and you got in up here, yeah. And again, it works, but it's just not a good setup. But we do come down here and we get a triple test. Notice 1, 2, 3. You really could count this as 1, 2, 3 because there is a move up and back down and then back up again there. But really, I like to see them a little more space in them. Usually, the more bars, the better. So this is a test here. Notice how we came back and tested it, came back and tested it, came back and tested. So that's a triple test. Nice reversal bar. There's obviously strong support there. Plenty of room back to the EMA. That's the first trade I really been crazy about this morning, and that turns out to be a nice move. And of course, it fails out the top. If that would have broke higher, you might could say, okay, we got a double top there and a lower high, but it doesn't really make a lower high till here. And again, that's an inside bar. I think it does make a matching high right there. Yes, it does, but it's so close to the EMA there. And there's always a chance it could bounce off of it. So when it made the second entry here, and then that's a failed second entry long too, I like going short there. Notice the new high, and you get a first entry, and then you come back again and get a second entry. Very nice reversal, very bearish bar. And then you got a new, technically there's not a new swing low there, but actually there is. It's a little more convoluted because there's matching lows here. So I'd count that as a new low and a first entry, second entry. Those two matching lows make that a swing low, make that a new swing basically. So you could count that as a swing low. It's a little convoluted, it's a little more advanced, but it's there if you understand what I'm talking about. If you don't put a lot of thought into it because it's real complicated, and you're not going to gain a lot by trying to use that. It's just something you'll use more down the road when you're really dissecting price movements and chart reading and so forth. But there's nothing real special about that at this point. I just treat this as a second entry. Just say, hey, it looks like a second entry. It looks like we're trying to go up twice and fail, and we're trying to come down twice. And it's a very bearish bar. So really, this is the way that I'm trading this is a double top with a lower high. That's the main reason I like that. But you could also argue that maybe it's a second entry short and a failed entry long. So hopefully that's the better explanation of it. But really, it's just a lower high off. This is a double top basically. A lot of people think a double top has to be exactly to the tick, but we tried to go higher. We tried to match it and we failed. That's a double top. And then this is a lower high off a double top with a very bearish bar. Turns out to be, it takes it a minute to get going. Turns out to be a pretty good trade. And then we find support down here. We just bounce along. So as soon as you get a good signal bar off the lows, look, that's a small one too. It's like 4 ticks. Very low risk. Take that trade. And I'll show you this. You can see there's just enough to get your scalp. So unfortunately, it will back up and it takes your runner. So you don't get a runner there. But so what I like to tell people is you don't want to try to trade runners in this tight kind of stuff unless you get a failed breakout. Then maybe you try to trade a runner. Like this would be considered a failed breakout of this congestion. Way back, plenty of room to run back. Maybe you try to get a runner there. Or when we get over here, maybe over here you try to get a runner. But in this tight stuff that doesn't break out or fail, just don't try to get runners. Just scalp out and be happy with it, and because it's probably all you're going to get. So I hope that's clear. I hope that makes sense. But let's move on. Triple test here, or just a long off the. I mean, look how many times we confirm. That's way more than triple test. I like that trade. And then we run up, and then we just start going sideways. You do get your break and new high. This one is tempting, but not much room back there again. Then it's tempting to go long, but not enough room. It's just too tight. Just be real careful in these. You got to have a little bitty bar like this. Or if this was real bearish, maybe you could have gone short there. But none of these others really offer you an opportunity to get in and get out with enough room. So just skip it. Sure, eventually it takes off there, but You don't know that's going to happen. See how it almost tried to turn down there, and if you'd got in, it probably turned down there and stopped you out. So then we run up here, we get a close, and we try to go higher a few times. Really, that's a triple test. 1, 2, 3. Very nice bearish bar. It's a double top. We expect prices to fail here, and there's really a hidden second entry there too. Again, that's more advanced. Don't worry about it if you've never heard that or don't understand that. It didn't technically break lower, but you can see we went higher, one leg, pulled back, then a second leg up, and then turned down. It's 2 legs up there. Triple test, very bearish bar. I like that one. You might catch a runner there if you wanted to ride this out, but very doubtful. And then, of course, you get another triple test here. And you would expect this breakout to fail, but really the bears and bulls were fighting it out. But what you have to ask yourself here is, who would you expect to win? Well, most breakouts fail, so I'm going to expect the bears to win out here and this to come back in the range. So when I saw this big bearish bar that went lower than any other and closed almost on this low, if it breaks lower there, it may not run all the way down, but I'll probably get a scalp out of that at a minimum. And I'm probably only going to try to get a scalp because you usually don't get runners out of this. Of course, in this case, you would have got a runner. But most of the time, you won't. And, of course, it quickly takes it back, runs back up, and you get another nice bearish bar, but it's still all inside that bullish channel. There's been no break yet, so you could get a break and attempt at a new high. And we did get the break. Prices were attempting a new high, but that took us into 230, and then it just went lower again. We got back in the range and couldn't go higher and traded down here and closed in the lower end of the day. So it made it look more bearish because we had all this movement in the overnight, but for the most part during the day, this was just flat sideways range. That's all we had. So anyway, there it is. I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com, and we'll see you